Run! Run! Run for the hills! The stock market is crashing. The world is ending. Everybody run for the hills. Sell everything. Friday, October 26th, 2018. And the emotional little nits are running for the hills. It's a beautiful little thing. Beautiful, beautiful, beautiful. So, for 3 months, I was warning people that this was coming. 3 months. We had hedges on that we've been taking off. I'm completely off with my hedges. Stock market is down another 433 points today on what is really pretty sleepy trading. So it's just a drift out, mainly from ETF investors would be my guess. That's what Bloomberg was talking about. And that makes some sense because scaredy cats sell at the end. And right now we are getting scaredy cat selling. So what did we talk about? For 3 months, I just kept saying the same thing. The buybacks matter. How much do the buybacks matter? Let's do some math. Let's do some math. I'm going to bust out my handy dandy calculator here and say, okay, $25 trillion in the stock market. 80% of it, give or take, is institutionally owned. So only $5 trillion is traded by the computers and by the day traders and by the hedge funds and by the proprietary traders and by mom and pop. And we know that there is $1 trillion going into buybacks this year. Trillion. Put a little trill in that. Trillion. So that means of this money that's normally traded, minus 1 is 4. Oh, let's put the plus back in there. Divided by 1. Oh, it's going to be backwards. 1 divided by 5. 20% of the tradable shares are disappearing this year. Okay, why is that so important? Because sometimes you feel like a nut, sometimes you don't. The buyback blackout peaked a week ago, and it's way down here now because yesterday was a huge earnings day for technology, which is where most of the money is for buybacks because they're the ones that repatriated money. They have about 80% of the money. The Nasdaq stocks, Nasdaq 100 stocks represent right around 80% of the buyback money. So most of this is S&P 500 money. Most of this, because they don't buy back for about 2 weeks going into earnings. And this is the biggest earnings day right there. Right there, that day right there, 25th. Let's see. 1 week, 2 weeks. The buybacks come back 48 hours after earnings. So that means that all the companies that reported yesterday are going to start buying back stock Monday and Tuesday. Probably Tuesday, maybe Monday. We'll see. That doesn't make sense to you. Stop investing your own money and hire somebody. It's that simple. Money flows matter. If there is a demand for stock, it goes up. And if there is not a demand for stock, it goes down. And what we see here is that every time earnings come around, there is a pause in buybacks, and the market sometimes anticipates it a little bit early, right? And then momentum catches on, and then people start going, it's the trade wars, it's Iran, it's rising interest rates, it's my cat stuck in a tree so I can't hit the clicker button. Look, I don't know how much more clear that can be. The stock market is down because 20% of the bid dried up, and it's coming back. Because if you're a corporate executive and your bonus depends on how well your stock is doing, because that's how you're getting paid all your bonus, what do you think is going to happen in November, December? Do you think they can't push this market up between 10 and 20%? Think again. I'm going to go on record and say right now, the S&P 500 hits 3,000 by New Year's. And if I'm wrong by a couple of weeks. We are going to get a huge stock market rally. And it's mainly going to be focused in the QQQ, so that's where you want to buy, which is what I just told everybody. Buy QQQ, Amazon, Google, First Solar right now. Now, these two are two of the 10 best companies in the world. You're going to rank all the companies in the world. These guys are powerhouses. They are what Exxon and General Electric were 30, 40, 50 years ago. Now, at some point, will they break up? Will they get regulated more? I don't know. They have pretty good lobbyists. The oil and gas industry has avoided regulation for decades. So has coal. Why? Because they buy a politician. So they buy just enough politicians so that their special interest is taken care of. Will these companies do the same thing? I don't know. Google started because of a CIA investment. Did you know that? Google, CIA. So we're going to Google, and then put CIA after it. It was their private equity firm. So the reality here is that you want to buy quality when the whole market gets the crap kicked out of it. I have argued relentlessly the QQQ is the better index compared to the S&P 500. S&P 500 is below 200-day support right now, 200-day moving average right now, which means that next week is very important, because if it goes below the 200-day moving average 2 Fridays in a row, then we might have a problem on our hand. I bet you a nickel right now that it is above 276 next week. That fast. Bam. From 263 to 276 in the next 5 days. And I could be wrong. Maybe the world really is ending. And I've just spent all my cash today. QQQ is flirting with the 200-day moving average. It's underneath. Now, on both of these, I wouldn't be surprised to see massive buying kick in literally in the next couple of hours. And we could have one of those days where the total swing in the market was 1,000 points. Not predicting it. I'm just saying it wouldn't surprise me if it happened. I could see this market touching green for a few minutes at some point late this afternoon. And then the mutual funds have to sell at the end of the day, so then the prices go back down. But this breakdown here, all the technical guys are saying, look. Here, let's pull up a 5-year chart instead. They said, look an awful lot of times, didn't they? They said, look here. They said, look here, look here, look here, and 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 now they're saying it again. I'm not saying that the stock market's not going to get back to this level at some point. I'm just saying, in fact, I've predicted that it will in the next year or two. This ain't it. And if it is it, then all of a sudden the Fed decides to be nice and it comes back. So you can speculate on the market dropping. Have at it. However, you've been wrong for a decade if you've been doing that. Second, the economy is still strong. Third, what would it really take for the Fed to say, hey, we're going to tap the brakes on interest rates going up and on shrinking the Fed balance sheet? You know what it'd take? What I just did. Hey, we're gonna tap the brakes a little bit because there's some trade pressures. Do you want to bet that people from the Fed are not going to be invited to the White House to have a chat at some point? I guarantee you they are. President Trump is a non-traditional president, and he's willing to do that sort of thing. Now, he's going to get lambasted for it, but I think the reality is that he's probably right to do it because the Fed has caused a lot of the problems in the past, and the people who have actually banged on Bernanke and Yellen, I think, have got it backwards. Greenspan is the one who teed everything up. And Powell reminds me a lot of Greenspan. And this number 2 guy that they just hired reminds me a lot of Greenspan. So that's what you have to be afraid of. Will they succumb to some pressure from the White House? I think that they'll succumb to some pressure from Wall Street. And the White House will kind of help. So here we go. Look at this. Oversold. Big time oversold. Why? Again, buybacks. There's no bid. The bid just fell off. How did the bid fall off? It wasn't mom and pop that was propping up this market. It wasn't the hedge funds. It wasn't the proprietary traders. What's been propping up this market is the marginal bid has been the corporations buying back their own shares. This has been true for about 4 years now. It's become more pronounced lately because the narratives out there, and Ben Hunt over at Epsilon Theory writes about narratives and he ends up with wrong conclusions as far as I'm concerned most of the time because he's got the wrong economic basis theoretically. However, if the stock market is this oversold and we know that the buybacks, 20% of the bid is coming back in the next couple of weeks on QQQ largely next week, what should we be doing today? You should be buying both hands, all right? So if we get down to right about there, what was that, 255? So hard. There we go. Come on. There you go. Reminds me of that scene from Blazing Saddles where he puts his left hand up and it's perfectly still and he goes, I can't shoot anymore. And the other person goes, well, your hand is perfectly still. Then he lifts his other hand shaking and trembling. He goes, but I shoot with this one. Yeah, so that's kind of what's going on here. So this market is probably right at a bottom right now. I mean, I think literally within 1% or 2%. And if you're not buying here, I don't understand why you do this. Amazon, look at that little double top there, comes back to it. Amazon, I want Amazon right now. Google, look at that, testing all those. It's not going to violate that. You really have to have an end of the world event. And these guys are buying back shares. Not many, but they're buying back quite a few. And they're a powerhouse. You see their revenue numbers? The revenue numbers were pretty good, and their profit numbers were great. So what does that mean? Think about the capital cycle. Think about CapEx. They just did a bunch of CapEx, and now their profits are going up. You have everything going to smart this, smart that. Online shopping, none of those trends have ended. And they're becoming marginally more profitable. Right? So the spend that Google just had was temporary. They're going to keep spending money, but it's going to be marginally more effective. And that's the way you have to think about it. Everybody that looks at these charts and goes, oh, you know what? Take a look at quantitative data. Quantitative data tells you that the earnings are going to be just fine for some of these big companies. And not all of them. Remember, I'm the guy who said, sell old economy stocks in some interview. Everything is changing. There you go. Wow, that's pretty good. Okay. So if you want to listen to a good interview, right here, listen to this one. Everything is changing. Dump old economy stocks now. And pretty good notes here. And let's take a look at GE, Philip Morris. Okay. Got all these dividend guys. I'm gonna never sell my Altria. 3 years, no money. GE, we know what that looks like. Never gonna sell my GE. Right? What other companies? Oh, told everybody to sell this one. On record. Why? Why does that happen? Because they have to spend a lot of capital to make some money. Now, as oversold as this is, could you play Caterpillar as a trade? Yes, if you were a nimble, great, amazing trader, go ahead and play Caterpillar as a trade. But I said all along it's going to go back down to around 100. Pretty darn close, right? Pretty darn close. So who else? Who else did I have hate for? I don't know. There's a whole bunch of them. 12 cells of Christmas. And there'll be 12 more cells of Christmas this year. Oh, who do we have last year? Who were the candidates? You know, I hate United Healthcare. Their day is coming. Eli Lilly, Pfizer, and Bristol Myers. I didn't even check these. LY. How have they in the last 5 years? Oh, I was wrong on that one. Ooh, they kicked my ass. All right. Pfizer. Oh, they kicked my ass too. PMY. Yay, got one right. But I will say this, the other two, they will be making return appearances to the 12 cells of Christmas. This is not viable. They're done. This is people thinking that healthcare stocks are defensive. They're wrong. Somebody just posted in the chat over here. Who posted it? President Trump going after. There you go. President Trump promises to unrig Medicare drug prices. That's the first step, right? But Congress, which is going to be more Democratic in a week, 2 weeks, I don't know if they'll take the House. I'm pretty sure they will. And I have no idea about the Senate. That looks like a coin flip. But President Trump will still be the president. And what did President Trump say like week 1 inside the White House? Why can't we just put everybody on Medicare? And the guy at Newsmax said maybe we should do that. And that's one of his best buddies. And why would we put everybody on Medicare? Now, granted, the bill that's out there now that Wisconsin Senator Tammy Baldwin is supporting, it's a crappy bill. The very simple way to fix healthcare in America is put everybody on Medicare for a base policy. Remember, administered by health insurance companies, not the government. Just set up mandatory coverages and do group pricing on drugs, right? By having non-standard pricing, basically just trying to get as much as they can out of each payer, it screws up the system. So if everybody paid the same price and Medicare negotiated that base price, pharmaceutical companies would all of a sudden lose a ton of margin. Why is that okay? Because universities are doing a lot of the research now anyway. And these companies can focus on the conditions and the diseases that the government maybe gives them extra money to study. So they can either gouge us, or there can be a more balanced system. Now, remember, Medicare for all is not free healthcare for all, and all the idiots who think that it is, or try to make it that, right? So you got people who think that it is, going to be free healthcare for all, and they're just dumb. And then you have people who are actually going to try to make it into that, and they're worse. Look, a hybrid system like Costa Rica, seriously, Costa Rica, look it up, or Switzerland. Some of these countries have amazing healthcare for half the price that we do. What does that mean? That means that there is going to be some solution. Maybe it won't be Medicare for all. Maybe it'll be more like I believe it's Switzerland, where the companies just can't make a profit on the base coverage. So that's why there are going to be weak spots in the market. And healthcare has to be one of those spots because the country can't afford what's going on, period. It'll bankrupt us. We can solve the retirement problems, no sweat. We can throw money at student debt. We can print a couple $1 trillion to rebuild the infrastructure. We can do all that, and it won't really matter. It won't be inflationary. But healthcare is inflationary, and that has to be nipped because you can't pay, and I can't pay, and nobody can pay 30, 40, 50% of their budget into healthcare. This is the next shoe to drop. In any case, Google bet. What have we talked about in the past? Is Google pregnant? Yes, Google is pregnant. Google is pregnant with baby Googles. And when those baby Googles start popping out, they're going to be worth between $10 and $50 billion day one. What does that mean? They're S&P 500 stocks right away. What does that mean? That means that they get index money. So when Alphabet starts having their baby Googles, you want to be a part of that. Buy Google now. Okay? I don't usually give stock picks on this presentation. Buy Google now. And if you're an indexer and or an ETF person and you just want a good hunk of companies, there you go. Apple, Amazon, Microsoft, Alphabet, Facebook, Cisco, Intel, all these companies you can buy right now. Some of the semiconductor companies are getting beat up extra good right now. I like a different ETF, but this one's more pure. This has gotten the crap kicked out of it. Fell off a cliff. 5 years. That's right in there. That's a support level. Nah, man, these are bad support levels. That's a pretty good one. So could this go down to 112? Sure. Will it? Probably not. Right in here, pretty close. Pretty close. So semiconductor is probably a buy later on next week. I like this one because it has solar in it. Sun power is in here too. Oh, they fell out of the top 20. Okay, well, they've been one of them. But okay, I like this index better. So I like that it's balanced. If you want to go real, but another way to do that is you buy this one. So you get, a little bit heavier weighting to these companies. And then just buy First Solar and Sun Power alongside it. That's a way to do that too. Pretty sexy. So we know we just had peak buyback blackout. We know it's going away quickly because the lead in the buybacks is slower than the phase out because they have the blackouts for about 2 weeks before they announce earnings. I think it's 15 days. And then they only have to wait 48 hours to start buying back their shares. And again, if you're a corporate CEO and you want your bonus and you've got a billion, billions, and billions of dollars laying around, what are you going to do? You're going to buy back shares. Here's a worksheet I put in our sheets. Just a worksheet. And you'll take a look at all these companies. So I got this ranked right now by net debt issuance. What does that mean? Negative $10 billion? It means they bought back debt. So all these companies here where it's got a negative, means that these companies are all reducing debt and still buying back shares. So Microsoft, hard to do better than Microsoft. In fact, Microsoft's probably a stock we can buy right now. Let's find out. Oh, I never understand why some of these websites get case sensitive from time to time. So Microsoft, it could go down a couple bucks, but look how resilient it's been. It's just a cash machine. So you get them at the 200-day moving average. I think you're doing yourself a favor. So you probably buy Microsoft today if you wanted to. Worksheet. Then you take a look. Who else is on this list? My God, it's ConocoPhillips and Western Digital, J&J, Dow DuPont, who I recommended, Qualcomm, right? Intel, who I recommended. Go right down this list. See, Caterpillar is a weird cat, right? Buying back share and reducing debt, but their problem is that they're just digging less holes. So, and I think you can play Caterpillar as a trade. I just think that it's so cyclical that you have to treat it like a trade. And I think the world is still in slow growth forever, will be for 30 more years. So Caterpillar is a stock that, I think the traders can beat the hell out of that because it's not a sexy name. Bristol Myers Squibb's getting the crap kicked out of it, even though they're buying back shares. But again, they have a very big potential revenue problem coming. A lot of times what these companies will do is they know they have a revenue problem coming, and that's why they'll buy back shares. So we played with a lot of these. I highlighted some of the ones that I thought had some sex appeal. Rockwell, interesting company. Automation. Rockwell's been on our list before, and still on the big list, the big very short list. I missed it down here. That was a table I should have bought. But that was going into the election, and everybody thought the world was going to end, and lo and behold. So let's talk Core 4 a little bit. Since we have an election coming up, let's talk Core 4, right? Core 4. I have a blog out there, and if you're watching, you're going to get the old report for free. Let's see here. Find Core 4. All right. I don't feel like looking for it. I'm going to do it the easy way. But I do have an old Core 4 report in here somewhere. Go to margin of safety. Getting started. Core 4. All right. Boom, boom, boom. Boom. All right. 4 things that we look at. Secular trends, government central bank policy, fundamental value, and then price trends, right? Technical guys are all about price trends. Hey, they got a good thing going. I like the quantitative approach. But, looking at lines, big long lines, I think the short lines are worthless. But the big long lines, I like those a lot. Fundamental value, I think people overrate companies all the time, especially dividend-paying companies. I mean, is there a single stock out there that you really would want in the last 10 years in Amazon and Google? There's not a single dividend-paying stock out there that's performed better. Government and central bank policy, we all know all about that. Central bank could be in the process of screwing up. We'll find out. If President Trump gets a Democratic Congress, and it doesn't even matter if the Senate flips because there's enough senators on the Republican side that would vote for it, you could very well see an infrastructure bill quickly next year. So interesting, right? And then the secular trends are, right? These are the 6 biggest secular trends: aging demographics, global debt, technological change, climate change, sustainability, and multipolar geopolitics. Wow. We hit those right on the head, right? So as we keep an eye on these things, we have to evaluate how we're treating our approach, and we want to find things that are going to do well or not do well based on these trends. Aging demographics makes healthcare super expensive. Governments are going to put pressure on healthcare, guaranteed. The spike up in healthcare stocks, you should be selling the heck out of it. I almost said selling the shit, but I can't say that on the internet. So sell the shit out of healthcare stocks. Global debt is a big problem, but ultimately, you know what we can do with money? We can print more. And while that is inflationary, if you just dump it into the general economy, what if we don't give it to the banks this time? Okay, rather than borrowing money to give to the banks, what if we just print $15 trillion in the United States? Whoa, that's horrible. Why? Helicopter money is coming, and you need to start thinking about this now because it's going to happen. When the next crisis hits, which could be anywhere from 2 to 10 years from now, they're going to print money. And they're going to do it one of two ways. The way they just did it, which they shouldn't because you've seen that it leaves a mark, or they'll just print money. And why can they just print money? Why? Because the aging demographics mean that we're going to have downward price pressure, deflationary pressure on the economy for decades, except in the healthcare space. So they have to regulate that. If they print money to bail out the retirement systems, like the United States is about 15 or something trillion short in Social Security over the next 75 years, I think it is. You don't have to worry about 75 years out. So the number is probably more like 7, 8, 9, 10 trillion over the next few decades. And you can adjust the formulas to fix the further out period. And the pension system is 4 to 6 trillion short. So let's suppose they print $10 trillion to bail out the pension system and the Social Security system for the next 30 years. Oh my God, $10 trillion. That's half the economy. Okay. If we trickle that money in over 30 years through pension payments and Social Security checks, is it instantly inflationary? Or does it just offset the aging demographics? See, all these things that they're trying to scare the hell out of you with, they're all fixable. Now, we could be forward-looking and try to explain this and fix it ahead of time, but that's not our MO. We like to have a crisis and then fly around with our heads screaming, and then the special interests get in there and they stick their hands into that bucket of money, just like they did in 2008 and 9. A lot of that money that we borrowed didn't get used well. Things need to be directed, and they need to be monitored, rather than just saying to 13 banks, here's trillions of dollars, figure it out. All right, that's worked okay, but it's left us with a big global debt problem. Okay, technological change is interesting because it actually is disinflationary, right? Because it puts pressure on wages. And that's why that's probably the biggest reason we haven't had inflation is that wages haven't gone up. So there's not more money to be spent. And I'll find it quickly here. But okay, let's find it real quickly. Fred and velocity of money. Somebody give me a chart. Velocity of money? Holy crap. That. The velocity of money has fallen off a cliff since the baby boomers started getting older. Look at that. That's millennials. Hi, millennials. Probably chop it along. It's not going to go up like that. This was the baby boomers spending a boatload of money during their peak earning years and sending kids to college and going on vacations and buying cars and stuff like that. This is the baby boomers getting older. And the millennials will offset that now. So we've pretty much hit the bottom of velocity of money. So now we just have to slowly build it back up. Something that's healthy, like this level. Over the next decade or two, we need to build that back up. And it'll happen. Happen messy. It'll happen politically. It'll happen because special interests are trying to get their cut of the big skim. But it'll happen. So, climate change and sustainability. I'm building a whole new website because these are going to be massive, massive trends over the next 20, 30 years. Then multipolar geopolitics. I think we're getting a big dose of that right now, right? China's like, hey, America, yeah, we can talk, but don't ask for too much. And Russia, theoretically, Russia should be much stronger. And they want to be, so they probably will get there eventually. But, you know, the guy that runs Russia and the oligarchs that run Russia, they steal all the money, so they have a problem. All right, so I'm going to get an updated version of this in the next month or two, and you can all have it for free. All right, so I'm going to stop recording if we start getting into specific stock questions, but for now, let's go to the Q&A. And remember, it's the buyback, stupid. And they're coming back. You should be a buyer right now. All right, who has a question that I should answer? Kind of a theme song for me. You go to Motley Fool, I am Kirky-Doo. Haven't really posted there in years, but if you Google Kirky-Doo, he's out there. I'm not all the Kirky-Doos, but I'm most of the Kirky-Doos. Ooh, look at that. Also Poker Buddha. All right. Where'd it go? Where'd my chat go? Chat. All right, let's pop that back up. I blended it in so good I lost it. All right. Oh, buy at the lower end of today's range. Yeah, hey, look like that. The market just popped back 100 points, like in moments. Oh, that's yeah. I don't think you can identify the lower end of today's range. How do you know? When the buyback blackout period expiring, in other words, when our company's allowed to start resuming buybacks. Oh, after 48 hours, I think I said that. Just bought some QQQ. Yay! Two things that worry me about near term are why buy ahead of election? Well, because the stock market loves split government, and you're about to get it. Record high margin debt with many people having never been worried about a bear market. Yeah, they've been selling for 3 days. Can we expect the QQ companies that don't have buybacks to rally as hard as the companies that do? No, probably not. Except Amazon. And that's why we have a list. You want to cherry pick, go ahead and cherry pick. If your portfolio is 6 figures, you can do some cherry picking. Oh, I lost it again. I'm not sure. Not really sure about that. All right, so the reason why not to, I answered this question in the chat and I sent it to everybody. The reason you don't take leverage while the market is still going down, right now you're trying to catch value. Don't take leverage until the trend is in your favor. Number 4 in the core 4. Right? Don't take leverage. Oh, how do I keep losing that? There you go. until the trend is in your favor. All right. I understand the Bible, but I know the MU is one of the largest. You have downward momentum. Big deal. I'm the only figure out there that's connecting the recent. I took all that stuff off the internet. All kinds of people that know about the buyback. Good grief. But I will tell you, 80% of the analysts out there are flat out dumb when it comes to macro, when it comes to market structure. They just know their companies. All these guys that are coming out there and the technical guys that, hey, it's either going to go up or it's going to go down. Look at my chart. Look, those charts only work in reverse. When you look backwards and say, look what happened. When you look forward, the underlying fundamentals, the underlying cash flow into the market. That's why I show you guys shaking money flow all the time. Shaking money flow is a big deal. The money going in is a big deal. And that has bottomed out and it's going to start coming back up. So you have to look for reversal points on that. But no, they're just dumb. They're dumb. They're flat out dumb. They don't understand that more money equals more demand and less money equals less demand. Right? It's just, if you have an apple and I'm starving, that apple's probably worth $10 to me, $100, whatever I have in my pocket. But if I just had a big fat steak and you say, hey, you want an apple? I'm like, yeah, if you're going to give it to me, maybe I'll take it. Oh, no, it costs $1. I just had a big steak. Supply and demand. Every decision in the world is supply and demand. Any thoughts on oil and oil stocks? Buy. If you're light on oil stocks, buy them. If you have them already, wait it out. Because the supply-demand equation in oil is decidedly bullish over the next 6 to 12 months. But, they're jawboning it down right now ahead of the election. Yes, I have looked at TAN. Don't like it. First Solar is debt-free and a leader in the utility space. SunPower is backed by Total and leader in commercial. And they'll become a leader in the home space, although Tesla is probably going to be a big deal there too. And what did we do? What? Oh my God. I just bought some Tesla. October 4th. I bought Tesla on October 4th. Waited. And I finally bought Tesla on October 4th. Pretty good, wouldn't you think? Yeah. Everybody should really be buying Tesla as well. Tesla is a big deal. Finally figured out how to do that. So I haven't talked a lot about Tesla other than calling Elon Musk a weirdo and a jerk. And I think I stand by that. I don't know. Maybe he's a sweet guy and he's just, crazy like a fox. But Tesla, if you looked at the Model 3 numbers, their margins were like 20%. Oh my God. The Model 3 is profitable. Think about that. So as production costs come down with better manufacturing, which they will, they'll start to be able to offer that $35,000 car soon, right? Because 20% of 42,000, which is what one of those usually costs now. Model 3 is really about a $42,000 car. But as manufacturing improves, they're going to be able to bring their costs down considerably, 20, 30, 40, 50%, right? As they get better manufacturing processes. That'll allow them to lower the price of the Model 3 and at the same time maintain those 20% margins. And those margins probably expand a little bit for several years. Tesla's a big deal. Now that they have truly industrial manufacturing capability. And very early infantile stages of that, but they're getting there. And if you think that Tesla hasn't done something amazing in starting a car company that just became profitable, and I don't think they're going to be profitable every quarter just yet, because they have to open up new plants, and they're going to open up 3 or 4 more, supply different parts of the world. Tesla could become the biggest car company in the world within 10 years. Now, I would bet against that. I think Toyota stays ahead of them. But I think Tesla will be selling more cars than Ford and GM within 10 years. There you go. That was one of the things I was going to tell you that I think is pretty shocking to a lot of people. I think Tesla is going to actually be bigger than GM and Ford. Legitimately what they're selling, not just market cap. And their solar panels and their energy storage solutions are very, very, very big deals. All right, so that came out of oil stocks. And again, I do like the oil stocks short term. I do think this is our last oil trade. On the long side, probably. We'll become shorts on oil sometime in the 2020s. Will CTL fall to fill the gap prior to its big jump? Let me check my magic 8-ball, my Ouija board, and let's find out. Dear Ouija board, will CenturyLink fill the gap? Teeny tiny gap from earnings. So my answer is maybe, but probably not. 5G is a big deal. I don't know. I think you can scale into CTL in this range. I do. I mean, they're right there. I mean, they're right at it. So you're basically asking, can they go down another $1? Who cares? Sell puts if you don't want to take that chance over $1. So yes, buy Micron, buy AT&T. Why Goog rather than Google? Share class doesn't matter. This is voting. This is non-voting. I forget which direction they're taking things. Eventually, they're supposed to only have one share class. I don't remember exactly, but Goog is the one. Goog is the one that trades for the most part. USOU here. Well, what has been the answer on US WTI? We need to see spot prices get down to about 62-ish. Is this right? Yeah. I said I wouldn't buy USO and USOU until spot oil got down to low 60s. So no, I'm not buying that. Doesn't mean it won't go up. And I'll tell you, if you're in USOU now or USO with calls, the next time that it goes back into the middle 70s, you need to start your scaling out process. So I know people didn't. They're trying to pick highs and lows. Cut it out. Pick 3 spots where you'll buy or 3 spots where you'll sell. Lockheed Martin and PayPal. Love both companies. Lockheed Martin has a long way to go down before I would buy them. Again, at some point, oops, that's not who I want. And I love Lockheed Martin. It's not cheap enough. You know, they're a big deal. Tell you what, if you got a kid who's saying, should I go work for Lockheed Martin or some other company? Lockheed Martin wins that conversation most times. I think at around 275 we can buy this one. Probably 275-ish, yeah, right in there. Couldn't get over. Yeah, that looks like pretty strong support level, 275. Great company. They're into everything. They're really a technology company. Yeah, that dividend gets into the 3s because it gets down to 275. I think it's a screaming buy. You know, on a crash, it could go, down here. 220s, 230s. And PayPal. So I was just talking to people about PayPal. Oh, look, we're talking about stocks. Darn it. PayPal, which I bought way down here. I sold. I've traded it. I'm not trading it anymore. I'm just accumulating it. It's a big holding for me now. It's about 4% of portfolios. Here's why PayPal is a company you should love. One, online marketplaces are largely using PayPal. They're global already. Stripe's not really a threat. They're kicking the shit out of Square. That's why Square fell off a cliff. So if you're contemplating buying Square because, oh, look how cheap it is, you should ask yourself a question. Why is it cheap? It's because of these guys. These guys are crushing them. So, Square's probably got to get bought by somebody. I think it actually makes sense for like Visa to buy Square. But who knows, PayPal, and the guy that runs Square, also Twitter, I don't think he's a great CEO. Really don't. I think a lot of other people think he's a great CEO. I think he's a good CEO, but I think he's pretty strategically impaired. I think that at some point a hedge fund's going to come in there and activist investors and say, dude, you need to sell Square. I don't want to sell Square. I love my Square. No, Square needs to get sold. But PayPal, same space, essentially. They don't just make money all the ways that they make money. They're going to make money in ways you don't know they're going to make money pretty soon. They're going to redo their credit offerings, right? They sold off a big hunk of credit, and now they're going to start it back up. Why was that a good move? Now they can reset it to higher quality, right? Because whenever the next recession comes, there's going to be problems with credit cards, and they didn't want no part of that. So they sold it off. It was basically insuring, right? It was insurance. Selling it was insurance. And then ultimately, there will be some survivors in the crypto space, and PayPal is in a wonderful position to be a brokerage slash transfer agent, more of a transfer agent, not a brokerage, for crypto. So if Bitcoin survives, and pick them, I don't know, 2 or 3 other ones survive, all different types of cryptos that can handle wire transfers, because it doesn't make sense that wire transfers aren't instant, and PayPal can be a part of that system. I think you're going to see a lot of that happen, and realistically, if PayPal can move money like a wire instantly, like within seconds, and the banks can't, now all of a sudden they can become a bank. So I think PayPal has an incredible amount of upside with almost no downside, because the money they already make more than justifies the share price, and they have some major catalysts over the next few years. So if you want a stock of the future, buy PayPal and learn the business, read the reports, understand that they have patents in the crypto and blockchain. It's important stuff. All right. One more. Satellite business is not hurting AT&T. They bought DIRECTV to have the satellites. They want to own those satellites. But ultimately, DIRECTV now in an unplugged world is a big deal. It's transition. There's money in transition. Think 2, 3, 4, 5 years out, not 2, 3, 4 quarters. Oh, shit, I didn't even know that. Well, good for them. Okay. I didn't know that. Well, that should be good for them, not bad. Huh. Oh. No. The COO resigned. I don't know. I haven't looked at Square in a while. I just know that they're not growing like they should, and it's because of PayPal. I don't know. Are they? Let's find out. Micron. Doesn't look like it. Yeah, I got a feeling they're waiting to see. Yeah. It is falling off a cliff. See now, let's talk about linguistics. When this happens, that's not falling off a cliff. That's falling off a cliff. All right. So, I know I scold some of you about the language. Oh my God, something's down 1 or 2%. It's falling out of bed. Meh. This was falling out of bed. And that's a bad sign right there. So you get your continuation. If you don't know Micron, buy it. I'm taking it on the chin with Micron right now. I'm not selling it though. I mean, why would I sell it down there, right? Why would I sell now? I bought a whole bunch of QQQ to write it back up. All right. I think there was one more. Okay. All right. So here's my China thing. No, I don't want anything China. I think everything America is better for the next few months. I don't think we have run into the trade issues yet. I think China is going to suffer for that a little bit. And I'm not ready to buy China. I bought that little bit of K-Web. It popped back up to close to 44. I told you a couple days before I did, I said, hey, we get a pop in K-Web. I'm going to sell it because I think that there's more pain to come. So I'm out of K-Web right now. And, I'm not a big fan. I think that China's got more problems coming. If they cut a trade deal, which I've become very skeptical of, then I think that you can jump back in. It'll jump 5 or 10% that first day, and you'll miss it. But it's got a long way to go up if they get a trade deal. But it'll take months and months for it to get back up there, or longer. It might take a year or two. So when you take a look at the long-term chart, it's right at one of the. This is a spot where you theoretically could buy it if you want the exposure. You got the room. It's not going to hurt you too much if you just do a little bit. But I think this trade war is bad. And ultimately, I think these guys might go down to 30-ish. At 30-ish, I'd probably buy a whole bunch. So that's where I'm at. I just like other things better. Oops, wrong one. I just started something. Oh, there's my cloud. You don't need my cloud. All right. 1 hour on the nose. We're done. Have a great weekend. Buy technology stocks. Not bye. Buy. Take care.